One of the main misconceptions is that you don't have to put 20% down to purchase a property. You don't have to put 10%, 5%. You can actually get a 0% down payment. Be prepared and make sure that you're able to stay in the market for longer than you want to, if you have to. Look for investment opportunities that have multiple paths to success. With each investment opportunity that you pursue, make sure that you always have a plan B.
Hello and welcome back to the Masters of Real Estate. Today we are going to learn from Adam Eldibany. Adam, how's it going?
It's going well, Nick. Thanks for having me.
Good. Yeah, thanks. It seems like you're joining us from Texas, the great state of Texas, and the beautiful city of Austin today. Adam, how do you describe yourself to your target audience these days?
My name is Adam Eldibany. I am a data scientist with experience in the financial services and real estate sectors. I've worked at companies like IBM, Realtor.com, another real estate tech startup based here in Austin called CrowdStreet. And that work eventually led me to found Homebldr, which is a real estate fintech company based also in Austin, Texas.
Love it, Adam. Before we get more into Home Builder and how you got to where you are today, I'm sure people want to understand or get a sense of who you are. So, what kind of spirit animal do you think best describes you or home builder?
The first thing that's really coming to mind is a phoenix. It's a bird that eventually dies and then is reborn from the ashes. And I think, every time that I've failed and I've crashed and burned throughout my career, I've had to look myself in the mirror and ask, Adam, should we just shut this all down and do something else? And I always land on the response to myself that no, never. We should just rise from the ashes and keep on pushing forward.
Keep on pushing forward. I love it. Is that kind of the main operating principle in your life? Is that the main rule of your life? Or what other rules do you ascertain?
I like to live yeah, that's kind of the main principle, I would say, but I'll rephrase it a bit. So I like to live my life with the mentality that if you do good work, if you truly put as much time and effort as you can put into your craft, whatever your craft may be, if you know that you're doing your absolute best, the results will come. And you might not see those results right away, whether, you're working towards money or recognition or whatever it is. But I believe that if you just keep grinding, you will eventually see those results, and it might happen at a different pace than others, and that's totally fine. Just keep doing the right thing, putting the work in, and eventually you'll get to where you want to be.
Love it. And it seems like, like you mentioned, you worked in large financial institutions, you worked as a consultant, you worked in prop tech as a data scientist, and now you are a founder. What metric do you think summarizes your professional life so far? Like, if you had to use a single metric to, contextualize everything, what would you use, and how is that metric doing these days?
So I do like this question. I think there are a couple of metrics that come to mind. The first one that I'll touch on is median absolute percent error. And that's not a business metric, right? It's actually an accuracy metric for predictive analytics and machine learning models. As I mentioned, I'm a data scientist by trade, and prior to founding Homebldr, I spent my entire career building predictive analytics and machine learning solutions, primarily focused on predicting different dollar values, right? And so, like, whether you're predicting the value of a house or the amount of capital that can be raised for a particular real estate deal, any dollar value prediction, you're most likely going to be checking your median absolute percent error. And so I've been obsessed with that metric at different points in my career. Luckily, I've passed that obsession by at this point. But I also want to touch on another metric. And this one, again, isn't really a traditional business metric, but it's just one that really summarizes my career. And that metric is number of pivots. And I've pivoted so many times in my career in both my corporate and entrepreneurial ventures. When I was at IBM, I was on a team that was focused on deploying machine learning models at different companies in the financial services sector. And we worked with every kind of financial business that you can think of, except for real estate businesses. And I was aware of real estate's reputation for being slow to adopt new technology and obviously the size of the industry. And I saw that as an opportunity. So I led the effort for my team to start chasing clients in the real estate space. And that was pivot number one. went from just financial services, banks, insurance, etc., to now we're looking at the real estate space. After that experience, my girlfriend at the time, now wife, and I decided to pack up and move to Austin, Texas from Chicago, where I joined a real estate startup called CrowdStreet as their first data scientist. That was pivot number two. Ultimately, I left CrowdStreet and just went full time on Homebldr, pivot number three, and then even just within Homebldr, we when we started out, we were initially focused on solving a completely different problem and pivoted not just once but twice before landing on our current business model. And so with each pivot definitely came a lot of stress and kind of a reset on the learning curve, a whole new learning curve. But looking back, each pivot eventually ended up getting me closer to accomplishing my goals. And so I think although it can be perceived as a negative, number of pivots is definitely a metric that describes me and my career.
Love the pivots, and it seems like they pivots by the way you describe them seem to happen in other people's lives as well. And the way you are dealing with you've dealt with adversity and challenges to rise in the ashes like a phoenix is quite remarkable. How did you decide your specialization in the intersection of data science and real estate in your early career? And then eventually, how did you decide your thesis with Homebuilder right these days?
Yeah. So first part of the question is how did I decide on my specialization of, kind of the intersection of data science and real estate? And and that's kind of a funny story. So I'll kind of refer back to when I was in college at Indiana University, which I know you know is the best basketball program in the country. But I majored in finance during my undergraduate studies. And I ultimately decided that I wasn't very passionate about any of the career paths that my finance degree was pushing me towards. So I started taking some technology classes, like just basic coding and electrical engineering classes. Really ended up enjoying some of those classes, and as I was about to become a senior, I made the decision to apply for and join a 1-year accelerated master's program in information systems, also at IU, instead of going out and getting a job right away. And truthfully, I wasn't exactly sure what I wanted to do with my life and my career, but I liked the idea of eventually working at a technology company and solving problems with technology, and thought grad school would kind of just help me figure everything out. And so, although my master's was a very great experience, really, really happy that I chose to do that, I still was not able to identify where I wanted to take my career after graduating. And so I'd actually specialized in cybersecurity and even spent the summer after graduating studying for and obtaining the cybersecurity certification. But then I ended up getting hired by IBM as kind of this general industry agnostic digital strategy consultant. And within my first 90 days at IBM, they approached me and were basically like, we've decided that you're going to be reassigned to our data science practice. We're going to put you through an intensive data science and statistics boot camp. And if you don't pass it, you're fired. Or they basically said, or alternatively, you can just leave, choose to leave right now. And so I was basically forced into this data science career path. And luckily, I ended up absolutely loving it. Literally, the first day of this IBM boot camp, I knew it was going to work for me. And the rest is kind of history. And then I kind of touched on how I ended up merging the data science skill set with the real estate space, right? Where we were just focused on the financial services sector, but primarily banks and insurance companies. I saw this opportunity to approach real estate clients, real estate companies, and solve some of their problems with data science and predictive analytics. And so I eventually helped my team break into that space. Now, the second part of your question, so how did I arrive at the thesis for which Homebldr is now really operating? And that's actually another kind of long story, but I mentioned we started out focused on a completely different problem. I don't know if you're familiar with the iBuying space and companies like Opendoor and OfferPad, but I was very intrigued as those companies began to kind of take off in at the beginning of this decade, so like 2020 through 2022. I thought that their product from a consumer perspective was extremely intriguing, and I just saw certain issues with how they were operating, especially holding tens of thousands of houses on their balance sheet at any given time. And the way that eventually played out is when interest rates really spiked throughout 2022, they couldn't move that inventory fast enough and got stuck holding properties that were declining in value and ultimately selling them for losses of upwards of $1 billion per quarter for a couple quarters across the industry into overall. But I thought that what we could do was help real estate agents that represented, or just real estate agents in general, start their own iBuying programs, basically. And so we built certain models, certain products that were aimed at helping them provide cash offers to sellers and then they would be acquiring, renovating, and reselling those properties. And really quickly after we launched the very first product that we built, real estate agents were kind of like, we're not going to start our own iBuying programs and completely change what we're doing on a day-to-day basis, but our investor clients would love to use these products. Can we do that? Can we figure that out? And of course I was like, yes, let's figure that out. And so that was kind of that first point where we pivoted and really realized that real estate agents don't always know how to work with investors, but a lot of them want to be able to work with investors, especially as investor market share is increasing. And so that's really where we realized we had something with building tools for investors, but also for real estate agents that represented investors.
Makes sense. Makes sense. Hey, Adam, so how did you decide your specialization or your final thesis with Home Builder? And what is it, the thesis right now?
The path to deciding on the thesis for the problem that we were going to solve with Homebuilder was really through early customer feedback. I mentioned we were initially focused on a completely different problem than we are focused on today. So when we launched our first product targeted at solving that initial problem, the feedback that we were receiving from early customers, primarily real estate agents, was that the solution we were proposing was not a good fit for the problem that we were set out to solve, but they actually had basically proposed an alternative way to use that solution, which was helping real estate agents better represent and work with investors. And so that's kind of when I knew we had something there, which was building tools for both investors and real estate agents that represent investors.
Fascinating. So, seems like your current thesis on Home Builder is helping real estate agents better serve investors who want to essentially make money from investing in real estate. Is that the right summary?
Yeah, yeah, and I can elaborate on that a little bit, but what we basically do is we help investors identify investment opportunities, due diligence those opportunities, access financing to acquire and or renovate those properties, and really just maximize returns. And what we've done is we've taken that entire process and white labeled it for agents so that when they're working with investors, they can provide all of that as a value add service. And then we set up a revenue share model so that they can actually make more per transaction while providing that value add to their clients.
That's amazing. So, let's say an agent is listening to this and they're curious about how the new journey would work with helping an investor identify, purchase, finance, and close, and then eventually stabilize an investment property. How would you explain user journey of how a dream process would work to an agent?
What the process would look like is that an agent would be able to provide their investor client with a white labeled portal, basically, that's branded like the agent's branding, personal branding, or their team or brokerage's branding. We also embed this process on their website, but that portal would allow their investor client to submit their buy box, right? The geographies they're interested in, the price point. the property characteristics. And once they submit that buy box, it's ingested by our models, which then identify every property within the buy box, underwrite every property from a fix and flip and rental perspective, and return a data set that realtor, that real estate agent, can now use to identify properties that maybe they want to pursue, right? Maybe they want to go see some properties, maybe they want to eliminate certain properties based on the underwriting that we provided. And then once they've actually identified a property or multiple properties that they want to offer on or that they have under contract, they can also request financing terms through this agent's white labeled portal. We're the back end of that. We would facilitate the loan processing, closing, funding, everything, and this is for, I should mention, this is for investment financing only, non QM. So we're able to actually then, once that loan closes, share some of the revenue that we generated from closing that loan back with the agent.
Let's take Sally, the investor, right? Sally has saved up, let's just say, $100,000 and wants to invest it in real estate, but doesn't know how to get started. And Sally reaches out to an agent of Homebldr. Let's just call them Anne. And Anne is using Homebldr's platform to make sure Sally can buy the right property. So, in this scenario, for Anne the agent, what are the biggest misconceptions they have about helping Sally buy the investment property that are fixed because of using Homebldr?
Well, I think one of the main misconceptions that we're able to help investors overcome or realize is that you don't, especially newer investors, and that's that you don't have to put 20% down to purchase a property, right? You don't have to put 10%, 5%. You can actually get a 0% down payment investment loan, and we can easily help facilitate that. Another misconception is that hard and private money is only available for single family investments, but we can actually provide short and long-term financing for multifamily investment properties up to 100 units, commercial properties, land, mixed use, and other types of assets. So I just think there's a lot of misconception and misunderstanding around that non-QM financing space and what types of investment loans are out there.
Understood. So seems like there are a lot of investment loans available for people buying investment properties that most people don't know about, as well as most people overestimate the amount of down payment is needed. For listeners who have never heard of non-QM financing before, what should they know about non-QM financing?
So non-QM is basically like not a qualified mortgage, not a conventional mortgage, and that means it's coming from essentially a private lender, whether that's a fund that is lending out of the fund or even just a high net worth individual that's lending their own money. And so because these are not Fannie and Freddie conventional mortgages. These are private loans. They are not regulated under RESPA, and there's a lot more flexibility in what you can do with them. And so, number one, debt to income ratio is not a factor, right? It's not based on the borrower's personal income. It's based on the asset and how the asset will perform. If it's a fix and flip, it's based on the spread between the purchase price plus the renovation costs and the after repair value. If it's a rental, it's based on the cash flow versus the monthly expenses. And so, with home affordability being at such a low point, it's it's very hard to use conventional mortgages to acquire investment properties because they a lot of people can't afford them. But that's where non-QM financing comes into play, and I think will become a larger and larger kind of space within the real estate financing industry.
Okay. So thanks to you, seems like now investors know that hey, they can buy an investment property with less than needed down payment if the property is going to perform well financially, either defined as the spread between, if they're buying a property just to flip it, then the spread between the profit possibility there, or if they're buying a property to hold it and rent it, then the spread between how much they would make every month versus how much they would pay every month. So let's say they buy a property that makes sense financially. What are the mistakes that investors should avoid when going about buying an investment property?
I think the mistakes that investors primarily make happen when they are inexperienced in the type of investment that they're trying to implement. Whether, if I think if you've asked investors that fix and flip homes how their first investment went, most of them will say they lost money. So I think one way to overcome the challenges that arise with a lack of experience is by partnering with more experienced investors. That would help a new investor both from just a learning standpoint, a success standpoint, but also likely from a financing terms standpoint, because while, like DTI, for example, is not a consideration for non-QM financing, experience level certainly is. So that's the main thing that I would advise new investors to do is find a mentor, a partner that has experience, and really stick with them and learn from them for their first few investments.
So, hey, Adam, what seems like, buying an investment property is desirable for a lot of investors, especially some listening to this. As they learn from your experience, what are the top 2 or 3 mistakes you think they should avoid when buying long-term rental properties?
Number one, making sure that you have either the experience or a partner with the experience in the investment strategy that you're targeting. It's very common for an investor that doesn't have experience to be unsuccessful in their first couple investments. So, number one is just making sure that someone involved in the transaction has the necessary experience. Number two is that I would say be prepared and make sure that you're able to stay in the market for longer than you want to, if you have to, right? So, different things can happen, rate hikes, other unexpected events. Look for investment opportunities that have multiple paths to success. If you kind of, pigeonhole yourself by acquiring a property that can't be rented out for whatever reason, its location, the characteristics of the property don't lend themselves to being a rental, and then all of a sudden you figure out that you're not going to be able to sell that property for what you thought you would sell it for, that's how you really get stuck in an investment. And so I would just make sure that with each investment opportunity that you pursue, make sure that you always have a plan B.
Makes sense. Work with someone experienced and have a plan B. It's a very solid insight. So let's talk about your own investment thesis. So let's say a family office calls you, Adam, and says, "Hey, I want to invest $100 million in real estate." How would you invest that capital, and why would you allocate it the way you would?
So if a family office called me and said we want to invest $100 million in real estate, I would probably advise them to not invest that entire amount in real estate. I would probably advise them to diversify a little bit. I think hard assets in general are the way to go, and hard assets are those that are difficult to make more of. So real estate and land is definitely the obvious one, but I would advise someone investing that amount of capital to also look at other hard assets such as gold, even Bitcoin. Those are hard assets that will continue to appreciate against the dollar as long as inflation's positive and the government can print money. So that would be my advice.
So seems like you would encourage portfolio diversification. But let's say that that was the real estate part of the portfolio. Everything else is already allocated. How would you allocate that 100 million within the real estate segment of the portfolio?
Again, diversification is the theme here. I would look probably to split those funds across certain assets that would be more likely to cash flow, but may not appreciate as significantly as the other side of the coin, which is where I think you take a bet in and you look at secondary or tertiary markets where, you know, cash flow isn't as certain, but long-term appreciation is the goal. And so I think, yeah, just diversifying across multiple strategies within real estate is is a safe bet with that type of fund.
Diversification makes a lot of sense across multiple strategies. Which strategies do you have in mind? Which strategies are you bullish on in, like, when we're recording this in Q3 2024?
I'm a big fan of buying when everyone else is selling or is bearish about something. So I believe, multifamily and office are kind of people are waiting, right, for this bubble to pop where the inventory for those asset classes is going to spike. But I wouldn't wait for, some kind of large influx of inventory to happen to start investing. I would start now. And so I think, a thesis that I have if I was investing in the market right now is I'd be looking at those asset classes.
What problems do you want to see solved in the real estate investment space, solved properly, that haven't been solved properly yet?
The problem that comes to mind is that I don't think has been solved properly yet is the time and inconvenience that you have to endure when selling a property, right? There are a lot of sellers out there, and this is not really specifically investors selling properties, but just sellers in general, home sellers. There's a lot of sellers out there that would gladly take a haircut on the sale price to sell quickly to avoid showings and everything else that comes with listing a home for sale, even to avoid having to work and to hire and work with a real estate agent sometimes. And so, I mean, there are already some solutions out there. Wholesaling is basically a solution, but wholesalers are difficult to deal with and their process is usually very analog. It's all done by phone and email. iBuyers, on the other hand, had a better solution to this problem, but the iBuyer business model hasn't proven to be profitable yet. And so I think from a consumer perspective, the iBuyer product is very intriguing, but I'm not sure that iBuying can be done at the scale that Open Door and OfferPad want to do it at. So I think this problem of speed and convenience when selling real estate has not been solved yet. And I think eventually there will be a good solution. Maybe it's, the next evolution of iBuying or wholesaling, but that's the problem that I think is top of my mind that still needs to be solved in the real estate space.
Completely agreed, Adam. It does seem it's still very hard and cumbersome to sell a home effortlessly. Coming back to home builder, what should investors and real estate agents know about home builder that you'd like to summarize?
One thing that's really interesting about our business model that maybe some of our competitors, other single family platforms, investment platforms don't allow is for users to kind of plug and play within the product suite, right? A lot of companies out there in the single family investment platform space want you to go through them for every part of the transaction, including like, the sourcing of a deal, offering, funding, management, sale. But with Home Builder, you can use our platform to find an investment property and then go, use your local go-to lender to fund it. Or you can come to us with a property that you found using an agent or a wholesaler and we'll fund it. So we're able to just fit into investors' existing processes as opposed to kind of forcing investors to change what they're already doing to tap into the value that we're providing. So I think that, we're a very flexible kind of plug and play platform. And I think that's something that's unique about us.
Completely agreed, Adam. And how should they reach out to you or the home builder team?
Yeah. So you can email info@homebuilderai.com, as well as go to our website, which is again homebuilderai.com, HOMEBLDRAI.com, and use our contact us page. You can request a term sheet if you have a deal in mind directly from our website, and we'll get back to you within a day or
Makes a
less.
lot of sense, Adam. Now I'll ask you some rapid fire questions. First is, what institution or organization would you fix if you had the time to fix it, and how would you fix it?
It would be the iBuyers, not to keep bringing them up, but Open Door, OfferPad. I think those organizations have a lot of good things going for them in their offerings, but there's some things that need to be tweaked in terms of the scale and the speed and the scale they're operating, and also the kind of how much they're leveraging local market knowledge in their business model.
And then, what if your loved ones agree to be mentored by you? What's the most important skill you would teach them?
I preach to everyone all the time to not care what other people think. I think it's a really difficult thing to not care about other people's opinions of you or what you're doing or how you hold yourself, but it's incredibly rewarding and freeing once you're able to operate that way. And the first step to learning that trait is to just be honest with yourself and acknowledge that you probably do care about what other people think at least some of the time, but that's definitely what I would and what I do try and teach to my network and my loved ones.
Yeah, focus on yourself and don't worry about what others think about you. That was Adam Eldibany, from the founder of Homebldr, a phoenix who has risen from the ashes several times. If you're a real estate agent, or you're buying an investment property, check out homebuilderai.com or reach out to Adam's team at info@homebuilderai.com to see how they can help you out, either find property or finance it. If you ever want to talk about real estate, shoot me a note at nick@home.llc. Thanks, everyone.